My name is Shobia. I head the marketing division for SysArc Informatics. I have the high honor and a great pleasure in introducing the next speaker and my boss, Mr. Govind Garg. Mr. Govind is a US citizen and an overseas citizen of India. Having earned a degree in finance, he learned the art of finance, investment, and capital markets working for a US employer. In a quest to make a company of repute to transform itself into fintech age, Mr. Garg accepted this opportunity to do just that for SysArc. A company that has been known for bringing out world-class solutions into the Indian lending software space for the past 20 years, SysArc brought on board a crop of young, bright entrepreneurial talents, including a leader like Mr. Garg. By avoiding in-reading and encouraging out-of-box management thinking, SysArc believes that it can continue its unsaleable leadership position under the leadership of Mr. Garg for the next 20 years to come. Mr. Garg is leading the transformation of the company and its product offerings into digital age. You'll hear from him his vision for Indian lenders and his plans to make them more competitive. Ladies and gentlemen, without much further ado, I take the pleasure of introducing our very own Vice President of Corporate Strategies, Mr. Govind Garg, onto the stage.
So I hope everyone in the crowd has had both an informative as well as a fun-filled day. I would like to begin my presentation with a small quote from the famed investor, Mr. Warren Buffett. Risk comes from not knowing what you're doing. Though vague in nature, this quote can illustrate a lot about Indian lending in general. Without a truly digital economy, lenders will always continue to operate with half knowledge, at best. This is truly a very innovative and turbulent age in the lending space. Fintechs are popping up left and right. According to Statista.com, between 2018 and 2022, the entire fintech space is supposed to grow, I would say, nearly 2.5 times to about 7.8 trillion rupees. That's quite a big deal. Conversely, banks and other traditional lenders are under tremendous scrutiny for various different issues, including enablement of financial frauds, and the significant level of NPAs. These players are being forced to get their act together, and that too quickly. Throughout this presentation, I will illustrate at a high level how SysArc Informatics has grown into the market leader that it is. I will also present 2 new and innovative products that we believe will revolutionize the Indian lending space. For those of you who haven't heard of us, SysArc's core business is to provide loan automation solutions for both the lending and the funding markets across the world. Our flagship product, LendPerfect, offers LOS, LMS, collections, and then a product that I want to talk about a little more is a loan monitoring and NPA management. Though the prospect of an account going into an NPA bucket would give any kind of lender a sleepless night, there's nothing they could do about it, especially, let's say, 10 years ago. Lenders could track payments with core banking reports, but it still was extremely difficult to give us a clear-cut picture on which accounts maintained proper documentation and compliance with the entire process. Early warning signals alerting lenders of any NPA-like behavior also did not exist. Finally, once an account was deemed an NPA, there was not much of a mechanism to collect any outstanding principal from these borrowers. This truly presented bankers and lenders with a major problem, but no solutions to fix it. Recognizing this problem, SysArc developed our credit monitoring and our NPA management solution. This system enabled lenders to do many things. For example, borrowers who are required to have some sort of compliance, like unexpired insurance, can be checked upon to make sure if their insurance are renewed and so on. Borrowers who are displaying early signs of default, distress, or delinquency, such as late payments or missed payments, can be contacted and a more efficient repayment method can be formulated. Finally, once the account has been classified as an NPA, lenders can bucket these borrowers into a 30-day NPA, a 60-day NPA, to begin further recovery activities. This particular solution has been implemented across various different lenders in India. Though these implementations were successful and the system is in heavy use, the NPA delinquency rate is still extremely high in India, especially when compared to the developed world. As a trusted partner and vendor to many of these lenders, we felt that it was our prerogative to do something about this. I've detailed how SysArc has helped many lenders automate their internal credit policies across all their workflow. Whether it's in a pre-sanction phase or a post-disbursement phase of the life cycle, our company has a ready-made solution to implement. In theory, however, after implementation of all these solutions, NPA rates should not be that high. However, NPA rates still remain high. Upon further investigation with one of our customers, we found out that much of the reason why they're amassing all these delinquent accounts was of incorrect, inaccurate, and inconsistent data all the way in the origination phase. Once an account was pushed to collectors, there were plenty of cases from which the collector has said that the data was the main reason why the account has been classified as an NPA. Don't get me wrong, my intention is not to put down our solutions, but to illustrate a larger fact. The fact that any system is only as good as the data that passes through it. So how do we proceed to fix such an issue? Training data entry clerks and branch managers is great, but that can only go so far. And that makes human error even more of an issue. One second. But that still leaves us with a very crucial portion of the life cycle susceptible to human error. If SysArc is going to do something constructive about this issue, we require a joint effort from multiple partners. If you remember earlier on in my speech, I had mentioned something about a fintech explosion, if you would. This became relevant to SysArc as we began to approach these partners in terms of a partnership. And much to our pleasant surprise, we were welcomed with open arms. Many of them had already established relationships with our customers, and each were so diverse in their core competency, ranging from, let's say, digitizing paper documentation, to scoring, to fraud detection, all the way to credit bureau, credit rating, and then pulling financials from the MCA as well. This was all great for us, but how do we do all these integrations? We have nearly 45 deployments of our LendPerfect product across India. Some of our more major customers have extremely customized versions. So for us to do a direct integration for all these services with our existing product, it would be a mammoth task, it would be time-consuming, and we don't believe that it would be a value add. So let me try to introduce our new product, ConnectPerfect, to fix that solution. There we go. ConnectPerfect is an API management bus designed only for lenders to consume any API, internal or external. The bus allows users to access a world of services by accessing only one API, and that's the ConnectPerfect API. This can connect both to our systems as well as any other internal systems at your lending institution. The advent of such a system truly making lending paperless and hands-free. Lenders do not have to be held captive to the data entry clerks who give less than proper attention to detail. What makes ConnectPerfect so special and different from similar offerings is its ability to take a consensus of various different data points before pushing any of that to the system. So for example, in terms of identity, we're able to pull name, date of birth, relatives, and permanent address from a consensus of Aadhaar, PAN, voter ID, gas connection, and RTO. Outside of this, we offer many more different integrations, and we can integrate with any other provider as well at any time. ConnectPerfect truly marks the beginning of the digital era for SysArc and their extended family. I would like to conclude this presentation with one more surprise product. In terms of lending, the MSME sector is one of the most underserved in India. According to RBI data, there is nearly a 26.5 trillion rupees shortfall in the MSME market. As such, the government of India continues to protect this as a priority sector. However, government protection is not enough just for that. There has to be a private solution and a private market player that addresses this market. To do this, all borrower-related barriers must be removed. Data entry must be restricted to fields only used to look up verifiable information. Let's not make them do more homework. This data collection burden must be transferred from borrowers to lenders and technology providers. The application process, for the most part today, operates in a silo. Borrowers have to approach individual lenders one by one. This is truly a broken system. We all know that when lenders compete, borrowers win. Before I introduce our new solution, I would like to address certain concerns arising from recent financial news. Many of you may have heard about Capital World and the controversy surrounding the announcement of the 59-minute loan. For those who haven't, Capital World is a website in which 51% of the equity is owned by a consortium of PSUs. On the website, borrowers can get an in-principle sanction within 59 minutes, or so they say. The controversy arises around data privacy issues and misrepresentation of the legal positions and services of Capital World. The service collects very sensitive information from borrowers and does not give them any assurance on how the data is actually going to be used and whether it will be passed on to stakeholders. There is a lot of confusion among borrowers whether the company is a bank or not. Additionally, they charge borrowers upfront a processing fee just to get an in-principle sanction. This, in and of itself, is a big barrier to entry for an already fragile sector. In an age of marketplace lending and increased borrower confidence in lending institutions, such a company has eroded much of the goodwill built up by the rest of the industry. A few predatory practices and questionable judgment calls should not stop those of us operating in good faith from making good progress. In an effort to show lenders and MSME borrowers how marketplaces can really alleviate the need for capital, SysArc is proud to announce the launch of its new product, LendingWallah. In its initial release, LendingWallah will fully digitize the MSME borrowing experience. For private limited and LLP companies, we are able to pull financials directly into our system from the MCA directly. In future releases, we will also be digitizing any form of financials for proprietors, partners, and societies. So the entire MSME sector will be covered under this product. We already have 3 pilot lenders who have already signed up with the service. We plan on launching at the end of the year. We then proceed to ask a single question from which we generate the entire income statement and balance sheet projections. Then, with the borrower knowledge and consent, we pull a credit report, attach it to the application, and we push it to lenders. On the other end, lenders set their borrower criteria based on multiple factors, but not limited to geography, revenue, financial ratios, industry, and so on. Lenders can configure multiple assessments for a single industry, or a single assessment for multiple industries, or both, your choice. At the end of the cycle, borrowers will be shown a list of lenders from whom they are qualified to borrow from. Lenders will also be able to pull applications from any or push applications to any major origination system for further processing. Even though lenders are forced to compete on individual applications, over the law of large numbers, the entire industry and economy will win. Some lenders may be more efficient in the short term and build a higher market share. To make the landscape more competitive between lenders, the LendingWallah marketplace provides intelligence in the form of analytical reports on the best practices of the more efficient lenders. Before I let you go, I want to end this presentation from a quote that I hold dear to myself. It's from a book called Unusual Billionaires by a gentleman named Saurabh Mukherjee. I define greatness for a company as the ability of a company to sustain superior financial performance over a long period of time. Such companies are rare. They can endure difficult economic conditions. Their growth is not beholden to domestic or global growth. They thrive in economic down cycles as well. Their management teams have strategies that deliver results better than their competitors. Over time, these companies learn from their mistakes and increase the distance between themselves and their competitors. Often, such companies appear conservative. However, they do not confuse their conservatism with their complacency. These companies simply bide their time for making the right moves. These traits are common among great companies and rarely found outside great companies. Thank you.